Hi, this is Joseph. It's November 3rd. It's Wednesday. What we're looking at is the aftermath of FOMC. So this is a good example. Very often I get the question, how well does the HL30 strategy, how well does it perform during news events? So this is perfect, right? Here's my signal. Right over here, you can see that level right there with that price tag. It's 1.1580. And you can see that it took many hours until the reaction here with FOMC. Now this is the euro dollar. This HL30 was a little bit interesting in the sense that the retest before the move back up again was pretty significant. That doesn't usually occur, but with a major economic data event like today, it does happen every once in a while, and you want to keep an eye on it just in case. And this is what happened. So we get in at 1.1580. We use a 20 pip stop loss and a 20 pip target. So if I get in at 80, my stop loss is going to be 60, and my target's going to be the 1600 level. If it hits the first target, and it is likely to continue, very often if you watch some of these videos on the YouTube channel or on my website, you'll see that the trend continues higher and it goes to the second target. And you want to be able to capitalize on that. You want to make as much money as you can on a trade like this. And this is so easy and so simple to do. There really isn't anything to worry about from the time you get into the trade. You just kind of set it and forget it, leave it alone, manage it if it goes to the first target. And I'll explain why you need to manage it when it hits the first target. This is what we do. We open up two orders. I open up two trade orders at the same time when I get into this trade at 1.1580. The reason that I do that is immediately when I get into the trade with two open orders, I set the first target at where I'm supposed to. I set the targets on the first lot, the first open order, at the first target at 1.1600, and then the stop loss at 1560. The second open order, I set the target at the 1.1620 area, and initially in the beginning I'm going to use the 1.1560 stop loss. Now I changed the stop loss on the second open order to a break-even stop once it hits the first target. So let's go ahead and review what happened here. Again, this is the euro dollar. So this one went sideways, retested the previous day's low, started to make a move. This candle right here only goes as high as 97. So it didn't hit the 1.1600 and it didn't close out the trade yet. And then we had this deep retracement. This is much deeper. I haven't seen a retracement like this in a long time, but today was FOMC. FOMC is a big announcement. We're waiting for this information. We want to know what the Fed's saying. We want to know how it's going to impact the markets. So it doesn't surprise me that we saw a move like this. Now remember, my stop was down here at 1.1560. That low right there, let me get the price tag for you. It reads 1.1561 and 7/10. So it was almost 2 pips away from my stop loss. So every once in a while, a 20 pip stop loss will see a test like this if it's prior to a major economic announcement. It can happen. It doesn't usually happen, but it can happen. Nevertheless, this trade did not hit my stop loss, and then it resumed, turned around, went back up, retested support again, bounced, and there is the reaction with FOMC right here on that red candle that closed flat, and then we get the following candle that closes strong and bullish right into the target. So with FOMC, it ran into my first target. It didn't hit the first target until FOMC. And again, that doesn't surprise me because FOMC, this particular announcement, was a pretty interesting. You can go through cycles. The markets go through these intraday and these different tiny cycles that are weekly, monthly, all of it. Annually, we understand, you should understand cycles, I should say, if you're trading. They're important. They take place everywhere in all different areas of the markets. But nevertheless, there's going to be some cycles where FOMC is going to be more important, let's say today, than it would be, let's say, 6 months down the road. You're going to have to be prepared for these specific events that might cause a more sharper reaction. So it is not always going to act like this. If you're in an HL30, let's say next month, FOMC, it's not going to react the same way. It'll probably continue straight through the targets like it's supposed to, and very often it'll hit all of the targets prior to the economic announcement. But if it doesn't, it's usually the economic announcement that pushes it right into our targets. It happens almost every single time if we're in a trade leading into that economic announcement and it still hasn't hit the targets yet. The reaction will drive it right into our price target. So the first open position that I had closed at 1.1600 and I earned 20 pips. Now I still have that second open position, because I want to take advantage of the fact that it may continue to trend higher and it's going to run into that 1.1620 area. I'll show you a couple of examples. And if you look at some of the, again, the YouTube channels or the videos on the website, you'll see example after example after example. I made a video yesterday and it hit both targets and it hits both targets over and over and over again. And you want to take advantage of that, but you have to protect yourself just in case it doesn't. Sometimes it'll stall and it won't go any higher. Or this trade has already paid me 20 pips. I trade standard lots, that's $200. If the second target goes to the 1620 in the next few hours, then that second trade, after it hits that second target, will then earn 40 pips. So my second position on this trade earns 40 pips if it hits the second target. My first position earns 20 pips. Effectively, I'm earning 60 pips on this trade. That means I've earned $600 just trading the HL30 and not really doing too much else. There are obviously other opportunities to trade and other ways to trade the price activity that's running around inside of these ranges. But I'm not talking about those techniques. I do have techniques that allow me to trade breakouts and reversals on larger time frames. They're different strategies altogether, and I teach them in my trading course. But let me show you what else it did. So we've got the dollar Swiss. I did the same thing on the dollar Swiss. Actually, if I tighten this chart up and I get rid of this data window, you can see I've traded the dollar Swiss HL30, but here on the 29th, it hit both targets. There was my entry. There's the first target. There's the second target. Here's another HL30 trading it to the downside. There's the first target. There's the second target. Here's an HL30 just yesterday to the upside. There's the first target. There's the second target. And here's an HL30 today. It's already hit the first target. We're trading it to the downside. And I'm waiting to see if price resumes similar to what you saw in the euro dollar. And if it hits that target right there at 0.9096, I will have earned, again, effectively, as a result of those two open positions, 60 pips. 20 pips on the first open order and 40 pips on the second order. That's from the entry to the final target there. Effectively, I earned 60 pips. Again, I trade standard lots, so each one of these could potentially pay me $600 on each one, or $1,800 between these two here. The euro dollar, if it hits the second target. The dollar Swiss, if it hits the second target. And then I've got another one over here on the pound dollar. The pound dollar has already hit both targets. Again, 4 days in a row, and all of these have hit their 60 pip or the equivalent of 60 pips. I earned $600 here, $600 here, $600 here, $200 so far on this one, and if it resumes, another $600. So you can see just how effective 4 trading days in a row, I'm trading the dollar Swiss, making money all of the time. And again, there are other strategies that I teach that will get you into some of these other bigger breakout moves so that you can capitalize on a lot of these other trading opportunities. Those are different strategies altogether. They're in my trading course. Now, I'm going to teach you, if you want to learn this HL30, I'll teach you for free. You can go to my website. For a limited time, you can download this book. This book's only going to be on my website for a little while longer. You could potentially make 20, 60, and even more than 100 pips. So far, again, 180 pips if they hit their targets. The euro dollar and the dollar Swiss, I'm still waiting for those, but the pound dollar hit its 60 pip target. You can see just how profitable it was. And I showed you on the dollar Swiss, for the last 4 trading days in a row, it's always hit its second target, earning a total of 60 pips on every one of those trades. That's a lot of money when you're trading standard lots. You can trade any variation. You don't have to trade standard lots. That's just what I do. A lot of my coaching clients, they'll trade micros or even mini lots, earning $1 a pip. Either way, you're still making really good money. But you can learn how to use this strategy. All you got to do is click the download button, enter your name and email, and you'll get instant access to it. And I'm also going to include some videos so you can see it working live, the HL30 in action. I'm going to show you a particular day. In one day, the HL30 set up on all 4 of the majors, and it hit the 60 pip target on all 4 of them, paying us $240. I earned $2,400 on that day just by simply using the HL30. I do use other strategies throughout the day, but just with the HL30, I set it and forget it, and it always works out just like I showed you. Download a copy of this. It's going to be only available for a really limited amount of time. It is in my trading course. I teach this. This is in Module 1, the 30-day shortcut. This is what you're going to get access to, and you're going to learn how to use it just like an expert, just the way I do. Thanks for watching.